Global Transformation Astrology, GTA, with William Stickevers.
I'm seeing a lot of cognitive bias, so pervasive and systemic in today's society that's affecting people in so many ways and in undermining their lives. And this has to do with the biases that exist, not just in terms of how people invest, but in terms of how they make big decisions, in terms of what they post and write on Facebook. Really, it comes down to these. There's over 108 officially listed, official psychologists, academics, and financial analysts have determined there's over 108 cognitive biases that exist. But these are the top. So cognitive bias is an error in cognition that arises in a person's line of reasoning when making a decision. So the decision is flawed essentially due to a immutable or unconscious personal belief. And cognitive errors play a major role in behavioral finance theory and behavioral political theory, and it's studied by investors, political academics, scientists, etc. So the first big one is overconfidence bias. Overconfidence bias results from someone's false sense of their skill. They have an inflated sense of their talent, their skill, or their belief that they're destined to do this or be successful. It can be dangerous. It can be a dangerous bias and is very prolific in behavioral finance and in capital markets. When people just go crazy, invest all their money, they borrow money off their credit card and they're buying things that they don't quite understand. You're seeing this now happen with people who do trading, all these young millennials and Gen Zers taking money. They don't even actually using their credit card, using debt in order to trade on the stock market. That's one of the big problems happening right now. So one of the most common manifestations of overconfidence includes the illusion of control, the illusion of timing optimism, and the desirability effect, the belief that something will happen because you want it to. The next one would be a self-serving bias. Self-serving is a cognitive bias in the propensity to attribute positive outcomes to skills and negative outcomes to luck. So in other words, we attribute the cause of something to whatever it is in our own best interest. And many of us can recall times that we've done something and we decided that if everything is going to plan, it's due to skill. And if everything is going the other way, then it's just bad luck, right? So there's a self-serving bias. And then the next bias is the herd mentality bias. And this is pervasive throughout the metaphysical community and the community that is completely vested in what we see now, who's completely vested in the stock market, for instance. And herd mentality is when investors or people in general blindly copy and follow what other people are doing or saying, right? We see this happen on Facebook. We see this with social media, right? And when they do this, they are being influenced by emotion rather than by independent thinking, independent analysis, independent research. And there are four main types. There's self-deception, heuristic simplification, emotion, and social bias, right? I won't go into all of them, but I won't go into them now, but herd mentality is something we're going to talk a lot more about. And what we need to do, members, is we need to deal with any element of herd mentality as part of your thinking. We need to eliminate that and drop it like a bad habit. We need to drop it like a bad habit. Herd mentality is going to be one of your greatest failings during this transformational crisis if you blindly copying and following what other people are doing, being influenced by emotion, right? Rather than using analysis, true analysis. The other one is risk aversion. And that's a tendency for investors to fear losses, to avoid them more than they focus on trying to make profits, right? You know, many investors, for instance, if you use investing with that approach, is rather than not lose 2,000, right, then earn 3,000. They're more willing to settle, right? They're more willing to say, okay, if I can at least make 2,000, I'd rather give up the risk to earn possibly 3,000. So the more losses one experiences, right, in life or in finance, the more loss adverse they are likely to become. Now, one of the problems with that is loss aversion is letting your backstory decide what your future story is going to be, where the past equals the future, right? Framing cognitive bias. Framing cognitive bias. So framing is when someone makes a decision because that's the way information is presented to them. So the decision is made because of the way or the style the information is presented to them, rather than based just on facts. In other words, it's sort of like what we see when someone does a very smooth way of selling an idea or selling a concept, or someone seeing the facts or the same facts presented in a different way. They are likely to come to a different conclusion about the information. Investors may pick investments differently depending on how the opportunity is presented to them. So it's a smooth talking salesman is often part of a requirement in what you see in Wall Street today, right? But they sort of go brush over the facts, right? And so framing cognitive bias is something like that is employed quite a bit, especially making big decisions, right? Investment decisions, emotional decisions, all types of decisions. Another one is narrative fallacy bias. Narrative fallacy bias. And this is an important one because it occurs because we naturally like stories and find them easier to make sense of or relate to. So it means we can be prone to choose less desirable outcomes due to the fact they have a better story behind them. The cognitive bias is similar to the framing bias, right? So we allow a certain story that we have a preference to, a backstory that we can relate to, or somebody else's backstory that then becomes part of our story, and how we are then prone to choose an outcome, and often a less desirable outcome in many instances, due to the fact, right, that we choose, right, a particular story. So we, again, very similar to risk aversion, and very similar to framing cognitive bias. And the next one is anchoring bias. And anchoring is the idea that we use pre-existing data as a reference point for all subsequent data, which can skew our decision-making processes. So this is what you see very common with astrology, right? People say, well, when this transit happened then, it means it will happen again this way, right? And this is where there's no sense, where we negate the context, where we negate context. For example, in a purchase, right? We see a car that costs 85,000 and then another car that costs 30,000. One could be influenced to think that the second car is very cheap. Whereas if you saw a $5,000 car first and then a $30,000 one second, you might think it's very expensive. So it's how things are anchored. So how things are presented to us using pre-existing data as a reference point, right? So again, the order and sequence and anchoring of how data is presented. But we also see that where in astrology, or especially in the predictive types of professions, where we get anchored based on a certain fixed thing that is no longer operates within the context of the reality that one is. So again, somehow using the past to anchor ourselves in predicting the future or shaping our decision. And the eighth one here is the confirmation bias. I'm sure most of you have heard that, who studied social sciences in college, and that is the idea that people seek out information and data that confirms their pre-existing ideas. They tend to ignore contrarian information, and this can be very dangerous. This can be a very dangerous form of cognitive bias in business and investing and in life. And the final one is hindsight bias. And that is the theory that when people predict a correct outcome, they wrongly believe that they knew it all along, right? So that's another issue. So these are all things that all of us are confronted with, or that are influencing and shaping our decisions. And we need to be very aware of that. This is something I'm very aware of, and that type of resistance. There's a resistance to go against our own biases, right? We have all these different, and everybody has different levels of bias, right? Some people have more issues with, they struggle more with herd mentality. Other people struggle more with risk aversion. Other people struggle with anchoring bias or confirmation bias. It really depends on their personality and where they're at in life. So this is something I want to bring out. These biases contribute to the larger cognitive dissonance. The larger cognitive dissonance I've been talking about, where there's a complete disconnect between what they say and the reality based on the real data that's coming in, and where they use certain confirmational bias, right, herd mentality or self-serving bias in order for them to make their conclusions and their decisions. So again, these types of biases are things that can really set us back, possibly endanger us, bankrupt us, right? These are biases. It's not just the uncertainty out there. And here's what I'm getting at. When you have all these eclipses, it challenges all these types of bias. Some people have that awakening and realize that, I have a bit of overconfidence here and I need to assess risk, right? I'm a little overconfident that my business is going to make a comeback or it's going to continue making money. I need to assess what's going on here. I need to assess information I'm not aware of, right? So there's that element of the eclipse that can shake up these types of bias. And then there's the shadow side where people double down and triple down on their bias. That further exacerbates and intensifies and solidifies the collective cognitive dissonance that is very much still pervasive in our society.
To watch the full presentation and more like this on geopolitics, the economy, and world events from an archetypal and mundane astrological perspective, join the Global Transformation Astrology membership. Go to gta.williamstickevers.com. Become a GTA member today.